Welcome to the Daily Market Recap. Today is Tuesday, August 11th, 2026. Wall Street had a classic choppy fence-sitting session today, hovering right near all-time record territory before winding down into a neutral finish. Investors were caught in a tug-of-war between fluctuating oil prices caused by Middle East geopolitical deadlocks and intense anticipation ahead of tomorrow morning's big CPI inflation release. With oil bouncing around due to ongoing Hormuz standoff concerns, traders preferred to hold back on massive directional bets today. Nevertheless, the underlying market posture remains surprisingly robust after an exceptional earnings season. Taking a peek under the hood at sector performance, energy caught early tailwinds from oil volatility before easing off, while technology and semiconductor names stayed generally resilient thanks to unrelenting demand for AI hardware infrastructure. On the flip side, interest rate-sensitive defensive sectors like real estate, utilities, and consumer staples felt mild pressure as the 10-year Treasury yield hovered around 4.68%. Checking in on our favorite market sentiment gauge, the Fear and Greed Index is sitting comfortably at a score of 61, keeping us firmly in greed territory. Investors are still feeling pretty optimistic, though everyone is treading carefully ahead of the upcoming economic data drops. Our top headline of the day, ongoing geopolitical tension in the Middle East continues to keep energy markets on a wild ride. Standoffs in negotiations regarding the Strait of Hormuz, paired with fresh security incidents along crucial shipping channels, raised supply disruption anxieties. WTI crude temporarily surged past $80 a barrel before pulling back. Wall Street is watching crude like a hawk, because any sustained spike in energy prices threatens to reignite inflation concerns just when rate cuts are on everyone's wish list. Coming in as our second biggest story is the classic calm before the macroeconomic storm. The Bureau of Labor Statistics is dropping the July Consumer Price Index report tomorrow morning. Consensus estimates call for headline CPI inflation to cool slightly to around 3.4% year over year, with core CPI expected to slow to 2.5%. A soft inflation print could reinforce expectations for Federal Reserve rate cuts, whereas a hotter than expected reading could trigger a rally in yields and throw cold water on stock market momentum. Rounding out our top three stories, sneaker favorite On Holding took a nasty fall today after slashing its full-year revenue outlook and missing second-quarter sales projections. The disappointing guidance sent shockwaves straight through the activewear and footwear space, dragging down peers like Nike, Puma, Adidas, and Under Armour. It seems selective consumer spending is starting to bite into premium retail names. Now, let me welcome you to today's market wild side. We saw huge single-day breakouts as well as some painful steep sell-offs across individual equities. Leading today's big winners were Nielsen IQ Holdings, Alligator Mining, Septerna, and FormFactor. NIQ charged higher following stellar earnings results and bumped up full-year operating targets. ALMR rocketed on exciting resource expansion announcements, while biotech firm Cepin surged on encouraging clinical trial progress. Chip testing equipment maker FRMI also caught strong buying power as solid semiconductor demand projections continue to power the AI rally. Over on the dark side of the board, Global Lithium On Holding, Hub Group, and eToro Group took serious hits. Lyft dropped as soft lithium commodity pricing squeezed industry margins. Onan tumbled hard after its sales guidance cut, as we covered earlier. Freight logistics player HUBG plunged on weaker transportation volume trends, and trading platform eToro slipped as retail trading activity showed signs of slowing ahead of big macro news. Taking a look at SPY chart technicals, the S&P 500 ETF is consolidating tightly near record highs at 771.71 dot. Immediate resistance rests right at the $772 to $775 ceiling. A decisive breakout above that level opens up clear sky territory on the pullback side. Initial support sits at $765, with secondary technical support holding around $758 near the 20-day moving average. Over on the tech powerhouse QQQ, price action closed around $718.70. Major overhead resistance remains established at $725. If tech bulls can clear $725 on heavy volume, expect another push toward record heights. If we see a broader pullback, key support is waiting at $710, with deeper structural support around $700. For the small cap barometer IWM, price action stayed essentially flat for the session at $300.99. The immediate breakout barrier for small caps sits at $305 resistance. On a dip, primary support rests at $297, with major trendline support lower down at $292. Shifting gears to crypto, Bitcoin slipped slightly below the $64,000 threshold today, trading near $63,900 after getting rejected at the $65,000 to $65,500 resistance zone. Geopolitical jitters and leveraged long liquidations pushed prices lower. Key immediate support for BTC lies between $63,000 and $63,600 BTC needs to reclaim and hold above $65,400 to regain momentum towards $66,800. Ethereum experienced a similar pullback, dropping below $1,900 to trade around $1,870. Technical resistance for Ether remains firm near $1,920. Immediate downside support sits around $1,860. With secondary support at $1,820, bulls need to push back above $1,900 to turn the short-term trend back to bullish. Across the broader altcoin sector, major coins like BNB, Solana, and Cardano saw moderate dips of 1% to 3% following Bitcoin's Q. However, selective tokens like Dogecoin and Tron managed to post minor gains. Crypto volume generally remains cautious as traders await macro inflation signals. To wrap things up, overall market sentiment stays guardedly optimistic, anchored in greed at 61, but running on patience. The single biggest event to watch tomorrow is the July CPI inflation report at 8:30 a.m. Eastern Time. That print will undoubtedly dictate interest rate expectations, bond yield directions, and market momentum for the rest of the week. If you found this recap helpful, please hit that like button and subscribe for daily market updates. Thanks for tuning in, and see you tomorrow.